So it's lunchtime here in Wilmington, Trolley Square area, one of my home bases and where I grew up. And I wanted to talk about what I'm professionally seeing here in the Delaware real estate market. First, we have to segment the market specifically between the northern areas, Newcastle, Kent, and Sussex, as they all move and operate differently. The Sussex Resort Beach areas is predominantly second homes, a lot of DMV, capital region individuals, and more recently New Yorkers and people from New Jersey have discovered the beautiful Delaware beaches. But in northern Newcastle County, and try not to get hit by a car, and northern Newcastle County and Kent, we're going to see influx from Pennsylvania, New York, New Jersey, sometimes Maryland specifically. And what I want to show you, first of all, editor chart for the 10-year, is we're seeing a continual increase in the 10-year yield. And why am I bringing this up? Because it directly impacts liquidity, it directly impacts purchasing power from home buyers and your affordability. And what that will do is it will put downward pressure onto home sellers. And the problem is it takes a while sometimes for people to understand fair market value. And we can do a CMA and look retroactively, try to explain deferred maintenance to individuals, repairs. Home inspectors are incredibly aggressive nowadays. So I sit down with people and really walk through that. But in terms of an economic perspective, buyers have power. It's the first time for a few years really where we're getting back into a strong buyer's market. So if you're out there and you're shopping for a home in Delaware, be aggressive, kick out a lowball. When I first started this business in 2012, it was basically right after everything hit the fan in 2008-ish, the great, quote unquote, great financial crisis. It was a great time to be around if you're a millennial. And when I remember, we were kicking out offers that were 30-40% below. It might work nowadays because you think a lot of the home buyers or home sellers are thinking 2021. COVID's gone, thank gosh, but we're back into a real market. And what has happened recently is this entire war situation has begun to disrupt the housing market, specifically due to the 10-year yields and the increasing in the bond prices. And that's how banks loan longer term and durations. And there's some basic math and things I can get into in a later video and do a whiteboard so that we're really clear. But for this specific contest, we're just looking at the 10-year, which we saw the chart from the editor. Thank you, sir. And we're going to look at that and try to extrapolate and make an inference from it and project out. So what are we projecting? We're projecting increasing rates that were going to be persistent for a period. We're not going to see anything, hopefully that's on. We're not going to see anything changing too much for the next foreseeable future. Generally, there's a push in the markets in the fall, right before the kids get to school. And I don't think we're going to see it this year. There's a big election coming up, and that's going to cause some problems, I think, from a decision process, and rightfully so. I mean, who knows what's going to happen with the elections, but there'll be probably paralysis between the parties, and that's all TBD. But we're going to continuously see the reluctance for people to quote unquote overpay for houses, and I think we're going to see a reluctance for people that are sellers to sell their houses. They might have equity, they might just be emotionally incapable at this point in time of divesting an asset at a certain price. So I think that's going to continue in Kent County as well. Newcastle and Kent are very, very similar. And the Sussex market is the second home market, which again is really supplicated to the bond market as well, and interest rates. These are second homes which are funded and originated a little more aggressively from the lending perspective. And aggressively, I mean there's heightened risk, higher costs. there's some matrices and some basic math we use when we're originating loans on that component. So, the overall trend, I think we're in a reset time in Delaware, which is the first time in a few years. I think if you're thinking about selling a house, really go through the math and really your net proceeds or what you think your house is worth. Consult a broker or a professional agent. I could be that guy. If you want to send me a message, call me. My information is going to be in the description for that. Home buyers as well. I'm happy to go over some fair market value analysis and nudge you in the corner to tell you to kick out those low balls. I mean, you don't know. I mean, I've seen some crazy things happen in real estate. So in my opinion, at this point in time, in end of August 2026, I would go for it and just see, because we're nearing a capitulation reset component, and we'll see what happens after that. I thought this year was going to be a boom year for everyone, and it was in the spring until the war started, and that's not decreasing at any point. So whatever political position you have is fine, but I'm just looking at the economics and the math behind it and how it impacts real estate specifically. And it's just going to increase the costs, which we went over, predominantly the 10-year yield. The bond market is pricing in disruption, high inflation. War is inflationary, a lot of spending, bombs, missiles, and that's going to impact the housing market. And psychologically, we're going to have issues from the election, as I mentioned, just due to the unknowns. People don't want fear when you're buying houses. This is a major decision. You're spending more money than most people have ever seen in their entire lives, and this is their piggy bank. So I totally understand if you don't want to sell at this point in time, but the market will speak, and you have to kind of really be conscientious of what your objectives are. But buyers, great for you. Sellers, yeah, I can't say it's going to change here until this war stops, and that's all unknown at this point in time. But if you're thinking about buying or selling, call me anytime. You have my information in the contact. Again, my name is Michael Kelczewski. I am a real estate broker and mortgage broker, and I work from Virginia to New York at this time. Thank you.